So, credit card use in the US is on a record decline. So, should you get a credit card and how do they work? Hey YouTube, the Finance Fool here, and I'm gonna break down how credit cards work, why you should get credit cards, and the cards I use. Now, I know credit cards might be a little bit scary, or you might be thinking, I'll just use a debit card for everything and owe nobody anything. But there's a lot more that goes into credit cards than you might think, and you're actually better off having one, assuming you can use it responsibly. Let's get to it. How do credit cards work? Well, at the most simplest level, all a credit card is you borrowing money from some company or financial institution and using that money to pay for whatever you want, and then at some point paying that company back. Usually how they make their money is by charging you interest or adding on a bunch of different fees. Let's get a little bit more into the nitty-gritty. If you ever wondered how credit card companies, or at least most of them, how they calculate how much interest you owe them, it's not really too hard. So here's a simple example. Let's say we have a 30-day billing cycle and we have an 18% APR. APR is your annual percentage rate, and all we're going to do is take that 18%, and since they're not going to charge us annually, they're going to charge us daily or monthly. Most of the time daily, unfortunately. We're going to take that 18% and divide it by 365 for the days we got in a year. Now that leaves us with this percentage, and we're going to keep that tucked away for now. And now let's assume we have a 30-day billing cycle and we owed $200 from the last billing cycle, and we don't use our credit card for anything for 10 days. Now in the next 10 days we buy $150 worth of stuff, and now our balance is up to $350. And then for the last 10 days in the cycle, we decide to pay some of it down. We'll pay $100 worth, and now our ending balance is $250. Now all we're going to do is take our remaining balance, multiply it by the amount of days that have passed with that balance, and then we're just going to add all of them up. Once we have that, that'll give us our total balance. Then we're going to divide that by the amount of days we have, and then we have our average daily balance. And how the companies charge you is, what they'll do is take that average daily balance we got, multiply it by that interest rate that we calculated before, and the amount of days in the billing cycle, and that'll get us how much they will charge us. Seems not that complicated. Now, unfortunately, credit card companies have tons of ways to charge you more through different fees. You have things like balance transfer fees, cash advance fees, late payment fees, annual fees, over limit fees if you opt in for those, and I could go on and on. Now, just to cover really quickly what these fees are, a balance transfer fee is when you're trying to get your balance from one card, move it over to the other. They usually charge a fee for that. Cash advance is using your credit card and an ATM like you would a debit card. They'll usually charge you crazy percentage rates for these. And late fee, kind of self-explanatory. Then you have your annual fee. Some nice cards will charge you an annual fee from $100 plus, get to as $500 or more. And over the limit fee is, again, you have to opt in for these, but you're basically giving the credit card company the okay to authorize payments that are above your credit limit, and then you'll have to pay them for going over that limit. If you don't opt in, then all these companies do is decline your card when you go over this limit. I know what you're thinking. After all that, why would I want a credit card? I'll just use my debit card for everything. There are some good things with credit cards. Namely, for starters, it'll raise your credit score, and your credit score will affect you getting whatever type of loan you're trying to get, and some other things. I'll be coming out with a video on credit scores, so I don't want to get too much into it, but the higher your credit score, the better. You can get tons of credit card rewards. I'll touch on that when I talk about the different cards I have. Credit cards are also accepted in most places, and you can even get consumer protection in some cases. Example, if you're buying a plane ticket, some credit cards will give you travel insurance for a certain amount, and there are tons of different types of consumer protections that cards can give. If you guys liked how I broke down how credit cards charge you and some of their benefits, make sure to like, comment, and subscribe. There'll be more financial content coming at you in the future. But now that we got the bad and some of the good, what cards am I using and why? And I'll explain why I am. So for starters, I have a Discover Chrome, Restaurant, and gas card. When I started getting my credit cards when I was a sophomore in college, I actually had a really bad credit score. If you guys don't know, your credit score ranges from 300 all the way up to 850. Mine was in the 500s, which is not so hot. And I had to get a secured card, which basically you give the credit card company a certain amount of cash, and that cash will be their insurance that you'll pay your monthly amount. So for me, it was $200. I couldn't borrow more than $200 on my Discover card, and if I ever didn't pay them, they could just take that $200 out of the money I gave them when I first got the card. Over time, when I proved that I knew how to use a credit card and I was responsible, they upgraded me to the Chrome, gas, and restaurant card, and it's the card I still have today. Now, with a lot of different credit cards, you'll get different cashbacks and rewards for different categories. So for this Discover card, I get 2% on gas and restaurants and 1% on everything else. So it's something that you'll always use. You're always going to have to get gas. You're always probably at some point going to go to a restaurant here and there. So it's a card that you'll always find a use for. And the requirements to get this card aren't that high. You don't need a really high credit score. But moving on, now we have the Chase Freedom card. This is the second card I got. I would say this is about mid-tier in terms of credit score. And the great thing about this card is it gives you 5% out for the Chase Freedom card. The categories are grocery stores, streaming services, and gym memberships. Usually I'll find one or two of the categories or something that I'll end up using. So in this case, that's grocery stores and streaming services. So I'm getting a free 5% back on things I'm paying for anyways. And if you guys sign up for a new card, they'll actually give you $200 if you spend $500 in 3 months. And if you're using one card for most of your purchases for 3 months, then trust me, you'll hit that 500 in no time. Card number 3, we have the Wells Fargo Propel card. Now this card, you need a good to excellent credit score, which is usually around 700-ish and up. So if you guys have amazing credit, this card is one of the best cards you can get that gives you no annual fee. All these cards have no annual fee and have 0% APR for the first 15 months because, you know, it's nice not having to pay interest for at least 15 months. And I'm not at the stage where I want to pay for an annual fee for a card. Now, usually these cards with annual fees, they'll give you a lot of stuff, maybe VIP access to things. You might get early access to different products and releases with the really nice ones, maybe even concert tickets. I'm talking about the really nice ones. The amount of things you can get cash back on or accumulate points with a bunch of different cards is crazy. But with the Wells Fargo Propel card, you actually get 3 points every time you spend it on streaming services, food, gas, rideshare, flights, hotels. So this card is usually my go-to card if the place accepts American Express, which is the only downside about this card. Not everyone will accept American Express, which is usually when I'll use the Chase Freedom card or my Discover card. Now I'll have a link down in the description below for all these cards. And I'm not saying that you guys have to get these cards, there are tons of cards out there, but since I'm familiar with these cards, I'm okay with recommending them. But a key thing for any credit card is just make sure you pay your balance in full in every month during the grace period. That way, regardless of what the APR is on these credit cards, you're not going to have to worry about it because you will not be charged anything extra if you pay your full credit card balance during the grace period. Also, when you guys are looking at what cards to get, make sure you look at whether they forgive any late payments. Some cards will forgive a couple, giving you some breathing room if you ever forget. Make sure you look at the APR. Is it a high APR right away? Do they give you 0 months for a certain amount of time? Also, if they have any annual fees, because those fees can add up if you're having them for multiple years. So those are the 3 cards that I'm using right now and why. I hope that gave you guys a better understanding of how credit cards work, the pros and cons of them, so you guys can make the best decision for your financial future. That's all I have for you today, guys. Make sure to like, comment, subscribe for more financial knowledge and tips. I'll see you in the next one, and we're done.